Hi everyone, I hope you had a wonderful weekend. The new week has kicked off and it's time to get back to work. Watch this video review of this week and find out the highlights of the Asian session. On a Friday, the US stock market was rather volatile. As a result, it closed mixed. However, the main stock indexes managed to notch a second-gainful week. However, optimistic sentiment is quite weak. Investors are concerned whether soaring inflation and monetary policy tightening could trigger a recession. Undoubtedly, the US economy is the largest in the world. However, the projected increase in the key rate from 25 to 50 basis points may undermine its stability. The greenback spread winks again amid market fears and geopolitical tensions. The US dollar index advanced by 0.23% against its main rivals on Monday, reaching 99.28 points. What's more, the US currency is supported by a rally in the bond market. The 10-year government bond yields rose by more than 2.5%, approaching the highest level since May 2019. It remains to be seen how the US dollar's trajectory may change in the American session. The Asian session was quite positive for the greenback. It's expected to trade in the range of 98.80 and 99.24. The yen, on the contrary, weakened because of the bond market. This morning, the Bank of Japan offered to buy unlimited amounts of 10-year Japanese government bonds at 0.25%. The move came after rising the 10-year government bond yield to a 6-year high. So far, traders have paid zero attention to this event. The Bank of Japan maintains an ultra-loose monetary policy. It makes the yen weaker against the greenback, especially after Fed's comments about more aggressive monetary policy tightening. This is why market participants are hardly surprised that the yen has slid to a 6-year low, following woes in the bond market. What's more, the yen seems to have lost a safe haven status. Instead, it has become an indicator of what investors think about rate hikes. At the same time, the US dollar has appreciated by almost 6% against the yen over the past 12 sessions. Today, the dollar-yen pair climbed to 123.92, which was quite expected. In the Asian session, the pair stayed within the 121.96 and 123.99 range. However, it may rise even higher. Some analysts believe that demand for the yen may recover this week. Perhaps it will be able to regain its safe haven status amid the geopolitical uncertainty and the central bank's auctions. Besides, the weaker yen is extremely beneficial for the Japanese economy. Meanwhile, the Aussie has hit a 4-month high, trading at 0.7528. Its rally was largely facilitated by rising commodity prices. Apart from that, the local stock market also gained momentum thanks to shares of commodity companies. Investors decided to add such shares in their portfolios amid soaring inflation and the expected rate hike. Currently, traders in Australia are worried about the coronavirus situation in China. China is Australia's #1 export market. After China's financial hub of Shanghai launched a 2-stage lockdown on Sunday, analysts fear a drop in consumer spending. Time will show how events will unfold. In the Asian session, the AUD-USD pair was still moving in the green zone of 0.7500 and 0.7537. And that's all for now. Keep abreast of the latest market news with InstaForex TV channel. Feel free to ask your questions down below and see you soon.